Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take. Your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today,
I got a bad feeling about this.
Jim Norton is in the house. Welcome, Jim Norton.
Great to be back.
Glad to have you with us. And let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by. Let's see, we're celebrating today. We celebrate every day on Ron Siegel Radio. Data Privacy Day. Now, is there any such thing as data privacy anymore?
You know better than that.
Big Brother's always listening. You know, you got that thing on your phone. I won't say her name just because, or his name, whatever you have your sound set, because then it'll start talking back to me in the middle of the broadcast. So it's always listening. You know, and every day we hear about more data breaches. So you just have to be careful. I mean, I don't know what you're supposed to do anymore. I mean, I talk about it all the time. Do not call.gov, optoutprescreen.com. California is coming up with something. But as good as efficient as the state of California is, do I expect it'll work? Probably not. If something worked in the state of California, I would probably be very, very shocked. Now, they do have, now Josh is over there in Vegas. They have methodologies for data privacy in Vegas, or at least they used to. And maybe if you recall, have you ever heard of 86ing? So when Comey said something about Trump 86 or 86 Trump or something like that, and people didn't know about what that means. You know what 80s, how they got the name, how they got the acronym 86?
Yeah, I got it from 6'7".
No, it started in Vegas. So 86 started in Vegas. And I won't say that I was related to Bugsy Siegel, but he does have the same last name. But back then, the idea of 86 came from 8 miles out, 6 feet deep. And that's the end.
86.
Okay, so, but let's celebrate something fun today because I've beaten anorexia. Today's National Blueberry Pancake Day, and a lot of pink in there. Woo. You got massive amounts of pink for blueberries. I wonder what does that look like? What is that on top? That almost looks like a cookie. Okay, so blueberry pancakes with some maple syrup. Now, I'm not talking about the Aunt Jemima stuff that's all corn fructose. I'm talking about the stuff that comes from Vermont or comes from Canada. Maple syrup, real maple syrup on top of those blueberries. That's what I'm talking about. That we could get behind. And yes, I would be in favor of that. Even though I've beaten anorexia, even though I'm on the weight loss journey, I will go with blueberry pancakes. Yes, indeed. Let's see what the markets are doing today. And when I left for the studio, it was basically ho-hum. As I look at it right now, I can say ho-hum. If you look at the 10-year Treasury, it's pretty flat, 4.254, 4.255. The mortgage bond is at par 02, down 3 basis points. The Dow Jones Industrial Average up 58, NASDAQ down 460, 4.6. I guess when I was going through, when I was working for Merrill Lynch 100 years ago, when we would say that the Dow was down 460, it was known that it meant 4.60. Now you say down 460 and it's 460 points. Because back then, you were talking about a 10,000 point average. Now you're talking about a 49,000 point average. You look at the NASDAQ is down 5.63. S&P 500 is up 1.3. Oil's down 32 cents a barrel. I'm not going to look at the gas prices because we are in California, but I'm looking at gold. And, gold is up another $121 an ounce right now, $5,300 an ounce. And I was on a call early this morning and they were saying, is gold the new safe haven? And I'm going to tell you the same thing that I said about 4 years ago with real estate. When real estate was trading, was going up 15 or 20% a year, I said, that's not good. That's not healthy. That's not sustainable. Anything that can go up 20% a year can go down 20% a year. Gold is up 50% or 100%. I guess it's 100%.
100%.
So you look at it, it was $2,700 an ounce at the beginning of 2025. And now we're looking at $5,300 an ounce. So it's doubled in the course of a year. Why is it doubling in the course of the year? I told you yesterday. If you weren't listening, shame on you. And if you're listening today, hey, say hello in the comments. We appreciate it. It helps the algorithm. Also, click the like button and the up arrow button and all those good things if you would. Again, it helps us to bring you great content on a daily basis. But why is gold up so much? Well, there's a lot of countries that they respect and fear the United States, but their central banks are not investing. And what they're doing is instead of buying U.S. treasuries as they normally would, they're buying gold. That's why the U.S. treasuries are not moving, and that's why gold is moving. And when you look at that, how long can they keep doing that? Well, there's a limited amount of money that they have, especially as the trade imbalance is leveling out and not quite the same as what it used to be, where they were extracting a lot of dollars from the U.S. Well, if they're having to spend that money on goods and services, tariffs, going back into the U.S., then they're not going to be able to continue this gold purchase. When that happens, that's a supply and demand issue. When the demand is not continuing at this pace, it's going to come back down. I promise you, and I don't guarantee anything because I'd get in trouble with the regulators, even though we're not regulated, but they still say, you're in a public forum, you can't go making guarantees that you can't substantiate. So the bottom line is gold is going to come back down. When? I don't know. But I wouldn't be putting my money into gold right now at $52.94 an ounce.
Can't afford $52.94 an ounce.
And thinking that it's gonna stay there. So, and Jim Norton made a good point. Is when gold is at $2,000, well, you might go and buy a Cougarand. You might save up money for a few months, go buy a Cougarand, stick it in the safe. Well, at 5,300, are you doing that anymore? We don't even save money in this country. So just think about those things. Again, give us that like if you understand what we're talking about, if you like what we're talking about. If you don't like what we're talking about, put a comment in there. Tell me your thoughts. I welcome respectful debate. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, so we've got how the top 2026 housing markets for buyers and sellers, and mortgage rates recently hit a 3-year low. Here's why that's still a big deal. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of rates locked across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, we have a suite of calculators. You wouldn't believe how many calculators we've put together for you. Our team has done a great job on this. rsrlinks.com/calculators. rsrlinks.com/calculators. Thinking about refinancing? There's a calculator for that. Thinking about buying a house and you want to know the payment? There's a calculator for that. You're thinking about investment property? Should I put my money in real estate or in the market? Well, there's a calculator for that. Calculators for everything. What did rates do yesterday? Well, it looks like they almost all went up. Oof, look at that chart that Josh shared with us. Conventional 30-year fixed, 6.051. That was down. Jumbo 30-year fixed, 6.394. That was up. FHA 30-year fixed, 5.923. That was up. VA 30-year fixed, 5.688. That was up. USDA 30-year fixed, 5.949. That was up. We don't like that. If you want our thoughts about the market each and every business day morning as early as the data allows, well, then you've got to go into our Ron Siegel Radio community, rsrlinks.com/HBOD, rsrlinks.com/HBOD. That is the Ron Siegel Radio community where we post each business day as early as the data allows our thoughts on the market. So what's going on in the market right now? Well, we've got the 10-year Treasury. It's up a basis point, 4.257. We've got the mortgage-backed security down 7 basis points right now, which means interest rates are up. Remember, bond down, rates up. Just statistics. It's just the way the seesaw works. And we're looking at the S&P 500 is now up 5.29. Does it mean anything? Not a darn thing right now. Why? Because the Fed's concluding their 2-day meeting today with their statement due at 11 o'clock, followed by a press conference from Jerome Powell. And we know what he's going to say at his press conference.
Such an idiot.
Yes. So we're going to hear from him at that time. Fed's going to pause and keep rates unchanged after cutting rates at each of the last 3 meetings. It appears they're going to pause until inflation comes down or the labor market shows additional weakness, essentially waiting until the last minute. Now, we already know that there's a lot of weakness in the labor market. We just saw several companies in the last couple days announcing layoffs. I think Amazon 16,000, UPS I think did 30,000. But that's a strong labor market according to our Federal Reserve.
Such an idiot.
How do I know they're going to do nothing? Well, they have the Fed mole, Nick Timiraos from the Wall Street Journal. If they were going to raise rates or lower rates, he would have made a comment about that on Sunday. He does a column Sundays, and he would have made a comment about it because the Fed does not like to surprise the market. So even though we know that the numbers that they're looking at are bogus numbers, not because somebody's manipulating them, it's because they're inefficient, they're incompetent, incapable. What do I mean by that? Well, the biggest component of the CPI and the biggest component of the personal consumption expenditures, which is the Fed's favorite measure of inflation, is shelter. Now, CPI uses, I think, like 43% of the CPI is shelter. Are you planning to move this year? Well, that's only one in 10 people move every year, give or take. But what the Bureau of Labor Statistics does in calculating that number is they look at 1/6 of the country every year to see what the inflation is on or deflation on shelter for that 1/6 of the country because they're not capable of doing the whole country. Why aren't they? Now, I could understand this 25 years ago when we didn't have an iPhone and the computers were bigger than a room where you can do all that on an iPhone now. It's not that difficult to do a survey and get surveys of the entire country so they can give us real-time data. But they're incompetent. I've told you that before. So we look, Truflation looks at 10 million data points instead of CPI and PCE's 80,000. It's also not using lagging data and delayed. While the Truflation data can be volatile, it's showing that PCE is at 1.39% and CPI is at 1.16%. Now, the official numbers, they're not going to come out at those numbers because the Bureau of Labor Statistics are a bunch of...
Such an idiot.
Yes, they're idiots.
Idiot.
Right? On the labor front, many Fed members think we're in a low fire environment, something the labor is stable. But again, the latest data from the conference board shows that consumers are not feeling it stable at all. January Consumer Confidence Index from the conference board fell to 84.5, the weakest reading in almost 12 years. The weakest components were around labor. Those that felt jobs were plentiful fell to the lowest level in almost 5 years, while those that thought jobs were hard to get rose to the highest level in almost 5 years. Additionally, there have been a lot of layoff announcements in 2026. Amazon planning to lay off 16,000 employees, UPS letting go 30,000 employees. Many Fed members hang their hat on the low fire environment because the initial jobless claims report, because it's likely not accurate. Does that surprise anybody?
Surprise, surprise, surprise.
The gig economy, it's grown substantially. Many cannot make ends meet by collecting unemployment benefits and are forced to do things like drive Uber. But then they don't get counted in the initial jobless claims because they're not eligible to collect benefits. So take a look at these things. That's the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. So as we've mentioned many, many times over the last 15 years that we've been doing this broadcast, real estate is local. And in some cases, we say loco. But, oh no, we shouldn't say that when we introduce Jim Norton. So Jim Norton's here. He is a local real estate guru. How you doing, Jim?
I'm doing good. I'm kind of local right now.
So
I got to be careful because you're on fire today after the Fed. So I'm gonna lay low so you don't run me over.
Yeah, you know something? It just drives me crazy when a low budget or no budget radio show can talk about some of these numbers, and the Federal Reserve, with I think last time I looked, they had 450 economic doctorates working for the Federal Reserve, and they can't figure these things out.
Well, and is there really anything to ever figure out? Because they're behind the eight ball. They're not ahead of it. Everything they do is behind.
Well, I think a lot of that
30 at best. If they were actually working efficiently, the best they'd be is 30 days behind. What are they right now? 60 because of the shutdown. They still haven't even caught up from the shutdown.
And we might be going into another one.
Yeah, and we're likely to get another one. So their numbers are there. But then I was thinking, I was kind of questioning when you're going over it, would they be any chance of those CPI formulas being revamped by AI? But then again, if you skew the algorithm, garbage in, garbage out, and you've got the same problem. Even though you're thinking AI is doing better, it depends on where you have AI searching for the data.
Well, here's the problem, and I got this from one of my favorite economists. Unfortunately, he's no longer on this side of the sidewalk. But I asked him, why do we use median home prices when we look at the home price surveys? And he said, Ron, it's bad data. So I said, Essie, why do we use it? He said, because it's consistent. Consistently bad, but it's consistent.
It's consistent.
So when you look at median home prices on a national number, it's telling us the mix of homes being sold. It's not telling us what happened on your street. So you look at these things and you say, okay, why do we continue to use CPI the way we're doing it, only surveying 1/6 of the country every month? Well, it's consistent. Consistently bad. Now, if they were to go and say, okay, as of the start of the year, we're going to go back and revamp the numbers and use the entire country. Well, then you're saying, okay, did it really change that much from January 2025 to January 2026, or is it because of the methodology of collecting data? So
yeah,
economists like to be consistent because they want to be able to predict numbers.
they want to just say we're right, and then they don't ever have to challenge. They're never challenged to whether they're wrong.
Well,
yeah,
I agree with you 50%.
Okay,
And I'll say, and I think you'll probably agree with me when I say this. The government numbers are never challenged, but in the private sector,
oh yeah,
right, in the private sector, if JP
comment.
Morgan comes off by being way off,
Yeah,
they're going to fire that guy and find somebody else, or gal. It doesn't. I'm just using that as a generic term.
Yeah,
right. They're gonna get fired, and they're gonna have to go find a
then they discount the person that's been right for 23 times in a row. They discount him. That it's just lucky guess.
And just throwing it out there because you opened up the door for me. Thank you.
You're welcome.
Is I've said many times that in order to come up with what we believe is great data to share on Ron Siegel Radio, we have to pay for our own data. Right? It's not, you can't go to CNN and get the left-wing data, and you can't go to Fox News and get the right-wing data.
Yep.
Because they're just going to tell you what they think you want to hear. Well, we have to go to sources that are that we pay them to give us data. One of our sources, and I've said this on the radio program many times, the Home Price Expectation Survey is the best place of getting data. Why is that the best? Well, they survey over 100 economists to get the data that they share. And those economists are from the private sector, they're from the government sector, they're from education, they're from industry, and they use that data. The source that I use is what they call their crystal ball 3 out of the last 5 years. They've come up with the best forecasting 3 of the last 5 years of that group of people. So when we share the data that we're sharing, it's not that I'm just pulling it out of my left ear, right? It's something that we pay for, a tidy sum, and then share the information. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, top 2026 housing markets for buyers and sellers. Mortgage rates recently hit a 3-year low. Here's why that's still a big deal. And more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Top 2026 housing markets for buyers and sellers. Who doesn't love a top 10 list? Well, here are 2 top 10 lists for the housing market this year. But before you take a look, there's something you should know. If a move is on your radar for 2026, here's the most important thing you need to understand up front. There isn't one housing market this year. There are many. Experts agree 2026 is shaping up to be one of the most geographically split housing markets in years. Does that surprise anybody that we've got a split in the United States?
Surprise, surprise, surprise.
Some areas are tilting in favor of sellers, while others are opening real doors for buyers. Who has the advantage depends almost entirely on where you are. Selma Hepp, chief economist of Cotality, puts it this way, quote, Looking ahead to 2026, regional differences will remain pronounced, with demand favoring areas that offer both economic opportunity and relative affordability, unquote. To show just how divided the landscape is, here's a look at where sellers are expected to have the upper hand and where first-time buyers may finally find their opening this year. So where are sellers poised to win big in 2026? Zillow identified the following metros as some of the strongest seller markets for 2026 based on buyer demand, pricing momentum, and how quickly homes are expected to sell. If you are watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 and FM 98.1 video feed, you are seeing a chart of the top markets for sellers in 2026. Hartford, Connecticut, number 1. Buffalo, New York, number 2. New York, number 3. Providence, Rhode Island, number 4. San Jose, number 5. Philadelphia, number 6. Boston, number 7. Los Angeles, number 8. Richmond, number 9. And Milwaukee, Wisconsin, number 10. In these markets, in markets like these, buyers are going to be competing for limited inventory, which gives sellers more leverage. It's competing for limited inventory in Los Angeles.
8 out of 10 are covered in snow.
and how many of them are blue? I digress.
No, that's aggressive.
In many markets like these, buyers are going to be competing for limited inventory, which gives sellers the upper hand. Homeowners and sellers markets this year can expect stronger buyer interest, shorter time on the market, better odds of selling close to or above asking price. This doesn't mean every listing is guaranteed success, but it does mean sellers who prepare well and lean on an agent's expertise should be very happy with their results in 2026. Markets where there's more opportunity for first-time buyers. On the flip side, here's a look at where buyers have the power. In particular, first-time buyers, since they've had the hardest time breaking into the market lately, Realtor.com highlights the top metros where first-time buyers are expected to have better opportunities in 2026. And yes, there is a chart on the screen for that as well. Number 1, Rochester. Number 2, Harrisburg, PA. Granite City, Illinois. Birmingham, Alabama. North Little Rock, Arkansas. Syracuse, New York. Baltimore, Maryland. St. Louis Park, Minnesota. Pittsburgh, PA. Garfield Heights, Ohio. These markets stand out for a mix of more affordable home prices. Yeah, in Baltimore, it comes with extra holes for you too. Better housing affordability, strong local amenities, and economic health. For first-time buyers, that combination matters. It's what could finally turn someday into this could actually work. In buyers' markets, they could expect less intense competition, more room to negotiate, a clearer path to getting an offer accepted. What matters more than any top 10 list? Not seeing your city on the list? Don't stress. This is just a national snapshot, not a judgment on your local market. The goal here is to just show you how different the market really is depending upon where you are. And remember, you can buy or sell no matter how your local market leans. You just need an agent's help to figure out the right strategy to get it done. For example, a seller in a more buyer-friendly metro may need to be aggressive on their price and prep. A buyer in a seller-leaning market may still need to come prepared with their best offer. We call that a certified buyer at Ron Siegel Radio. rsrlinks.com/certified buyer. To find out where your market falls and what you should expect, you'll want the help of a local expert, and we have a report card for all of them throughout the United States. Bottom line, the housing market in 2026 isn't one size fits all. It's where local conditions matter more than ever. Whether your market leans more buyer-friendly or seller-friendly, the right strategy can put you in a strong position, and that's where a local expert comes in. Give me a call, 800-306-1990, 800-306-1990. Again, that's the real-time real estate segment brought to you by rsrmoney.com. So I look at this report, Jim Norton, I'm looking and thinking, okay, we got the top 10 sellers is identified by Zillow. Zillow's in the business of listing properties for an advertising fee to get homes sold. No conflict of interest there. And I don't know exactly where Zillow's. Josh, would you look and see where Zillow's headquarters is for me? Then you look at the first-time buyers report coming from Realtor.com. Now, many people might think that Realtor.com has something to do with realtors or real estate agents.
That's the purpose of the name.
Okay, that was before News Corp bought the name from the National Association of Realtors several years back. News Corp. Oh yeah, that's Fox News and the whole Murdoch clan.
Yeah.
So you got to wonder. I mean, when I see that Los Angeles is a seller's market, would you say Los Angeles is a seller's market, Jim?
I like San Jose too. That was like, so why San Jose? I
Okay,
mean,
so Zillow's based out of Seattle.
is every tech firm leaving San Jose area? I mean, because that's not just the city of San Jose. That's got to be more.
No, but it's saying sellers have the advantage.
Sellers have the
So
advantage.
that means nobody's leaving and everyone's moving into San Jose. I thought I saw that Salesforce left. I thought I saw that
that's what
several
I thought.
companies are leaving.
And then everybody's staying in LA with a mansion tax. And let's see, most LA, what's the median income in our medium selling price in LA is like 1.2, I think 1.2.
Yeah,
roughly.
you look at some of these things,
Yeah.
and
I'm
I
not
just
not sure how
I'm
where
scratching my head on this and saying that,
but everybody likes a top 10 list.
everybody you have to fill out the top 10 list. Right?
Yeah, you got to fill it in.
So Zillow's Josh just found for me. Zillow's based in Seattle.
Okay.
So
Well, it makes you wonder too how. Okay, I was thinking when I made the comment about the snowstorm, and how will that affect the data? Because obviously, for a week here in the month of January, it'll be at least a week, maybe 2 weeks. You'll pretty much shut down the housing market because people won't go out and look for new houses, and so that'll skew. The storm itself will skew the numbers in 8 out of 10 of the top 10.
I'm looking at you sitting here in Orange County, California, in a big old Patagonia, right? And then we think about our friends that are in the other 40 states.
Yeah.
And they're in single digit weather.
Yeah. I mean, I say this morning, I'm cold and you're in Honolulu over there.
Yeah.
So,
Well,
we're not sure which one of us is colder.
Well, I
But,
don't get a choice because I just get wardrobe, and whatever I get put out in the wardrobe department is.
Well, you don't have any meat on you left. You're wilting away.
But you just look at some of the reports, and you just kind of
You just scratch your head. I mean, it's
Exactly.
just great. The simplification. It's really amazing because so much data sometimes messes up with the real estate market. Because I get calls from people and I get conversations. Let's leave the calls out. I get conversations and everybody's like, well, should I wait for these interest rates to come down? And it's like, well, have they? It's like, well, not really. That's why I'm asking and everything. I say, well, then get used to it. 2026, 6%. That's the number, man. And you know what? If it goes to 5, you refi. It's not to block you. Just start doing your calculations based on your 6%. And if you're a seller, they're coming in at 6%. They're already nervous about it. You better not be thinking, okay, I'm going to press the market as high as I can, because all you're going to do is get disappointment. You're going to press the market correctly and get ready to know how to sell your house. What are you offering to sell the house? Because maybe you're going to think, okay, I've got everything's in great shape. Everything looks great, but how can I get that buyer over the finish line? Well, you might have to help out on the closing costs. You might have to do something. I think the process has not more sophisticated, but it has more moving parts to it. I was just talking to somebody this morning about in California, you used to be, what about this? What about the HOA? What about this? You better worry about insurance. I mean, that's almost going to be the holy grail, to make sure you have insurance for the new house, or you can bring your policy with you, or if you don't have any. First time home buyers market, man, I don't know what to do with these people. They're not building the first time home. They're not building.
I saw a post online this morning. Very successful real estate agent in South Orange County, and just talking about the idea that it's very difficult to get first-time home buyers to afford anything in Orange County. And do you think anything's going to change? Well, home price. And my comment to him is really simple. There's only 3 things that affect affordability, right?
Yeah.
Price of the house.
Yep.
The amount you earn, and interest rates, right? Those are the 3 numbers that go into affordability.
Right. Well,
Right?
and then, but then they're all based on the same number one economic principle, supply and demand.
Sure.
I mean, it's your best bet for affordability is like if you either work your way into the numbers, maybe get a better job, better money, more money or something, et cetera, whatever you do to affect those three, right? But affordability is really going to be more affected by supply and demand. The more supply we have of an affordable product is going to help meet some of the demand. But we don't have a tiered system anymore for affordability.
Here's what my comment was to him today was you've got the three components of affordability. We can't control our wages, right? I mean, maybe get another job, maybe not.
Right. I hear what you're saying. For the most part,
people are not changing jobs.
Well, they're frozen right now because they're looking at the layoffs.
Okay, so wages are we can't control that.
Nope.
We can't control the home price. That's supply and demand.
Yep.
We can control the interest rate.
We can.
Right?
We can. You can.
The comment that I put in there is if you're selling a house and you want to try and get the most money for your property, you need to add one line to all of your listings and listing descriptions. Seller has approved special financing terms through their preferred lender. And yes, I do lead a lending team, but I also know how to do that to get you the benefits there.
Right.
So that's a key thing. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, more with Jim Norton, and mortgage rates recently hit a 3-year low. Here's why that's still a big deal. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage 101 brought to you by rsrlinks.com/Sora, rsrlinks.com/Sora. Mortgage rates recently hit a 3-year low. Here's why that's still a big deal. If you're one of the thousands of home buyers waiting for rates to fall, you should know it's already happening, and they recently crossed an important milestone. Rates officially dipped to their toes into the fives, something that hasn't happened in about 3 years. This moment marked a critical threshold. Now rates are sitting in the low sixes, and expert forecasts project they'll hover near this range throughout the year. Here's why that's so good for you. Why current rates are such a big deal. A mortgage rate doesn't just affect the interest you end up paying on your home loan. It shapes your entire buying experience. When rates were around 7% just a year ago, a lot of buyers felt priced out. Payments were higher. Budgets felt tight. Affordability was a bigger challenge. That's especially true for first-time home buyers who felt the biggest pinch. But according to industry experts, that's starting to change now that rates are slowly inching down. Let's break down why. Right now, borrowing costs are in the lowest range in almost 3 years, and that can change the type of home you can afford. At 6% or below, you'll see lower monthly payments. The payment on a $400,000 loan is down over $300 compared to when rates were around 7%. More buying power thanks to the extra breathing room in your budget. In other words, you can now make a stronger offer, purchase a different location, or buy a home that checks more of your boxes, and that feels like a big shift compared to when rates were at 7%. This opens the door from $550,000 buyers. To drive home just how much this helps potential home buyers like you. Consider this research from the National Association of Realtors, NAR. It shows that when mortgage rates sit around this level, millions more households can afford a home. When rates are at 6% or below, 5.5 million more households can afford the median priced home, and roughly 550,000 of those people will likely buy a home within 12 to 18 months. That's not just speculation. That's pent-up demand finally getting the green light they've been waiting for. You've got the chance right now to get ahead and buy before more people notice the game has just changed. Because whether rates stay in the low sixes or dip back down into the upper fives, the math is already working in your favor. And the difference from a low 6% to a high 5% isn't as big as you may think, but the difference from 7% to 6%, that is very much a big deal, and it's a number that's already working in your favor. Mortgage rates don't operate in a vacuum. That's the important call out here. Home prices, local inventory, property taxes, home insurance, and your personal finances still matter. And a rate in this territory doesn't mean every home suddenly works for every buyer. That's why getting pre-certified, rsrlinks.com/certified buyer, rsrlinks.com/certified buyer, and running your numbers with a trusted lender is key. Still, this rate environment puts more buyers in play than we've seen in years. So if buying didn't work for you before, it's worth taking another look. Bottom line, mortgage rates dropping to a 3-year low isn't just a headline. For many buyers, where rates are now could be the difference between watching from the sideline and finally getting the keys to the next home. If you've been waiting for a sign to rerun your numbers and see what's possible, this is the sign right now. That is Mortgage 101, brought to you by rsrlinks.com/Sora, rsrlinks.com/Sora. Go to that link, rsrlinks.com/Sora. 30 seconds, you can get a mini loan app and find out if you're ready to buy a house right now or what you might need to do to buy a house right now. So let's continue our conversation with Jim Norton. So we were talking before the break about affordability. Now we're looking at interest rates. And, Jim and I don't do a whole lot of planning for our radio shows. We just sit here and have a conversation and let you eavesdrop. And Jim had made a comment early in the broadcast about the idea of rates sticking around the 6% range. And all of a sudden, we've got a story about rates sticking around the 6% range. And someone might actually think that Jim Norton had a preview.
I could feel it coming. No.
Prognosticating.
Yeah, prognosticating. What's interesting too is we have a lot of tax cuts coming up, and I'm not sure. Each individual is different, so we don't need to go down the list of whatever might be good tax cut by whatever, because it could be more money in your pocket from tips and stuff, whatever that is, whatever that one was.
Tips, overtime, and
overtime, etc. Or could be affected the federal taxes with the mortgage deduction, that type of thing. But it doesn't really matter because 6 is holding right now. We've already gone through the first month. You only got 11 months left in 26. And
hard to believe we're saying that, Jim.
Yeah, welcome, man. There went January, it's the 28th of January, Ron.
I know.
I mean, it's already over. Where did I blinked and it's gone? Must be getting older. but anyways, the point being is that, you know what, if you're on the fence at buying at 6, don't be on the fence, because there's a lot of things that are going to help you out coming this year. And what's going to happen though is inventory is barely up a little bit. And what's going to happen is you get into the spring market where you get a little more buyers coming in, you're going to be pressed back out because you're going to get stronger. If stronger buyers start showing up, you're going to get pressed out. And this is why they always say, well, what's a good time to buy? Well, the time to buy is when you can control the information. You know what your numbers are. You know what the numbers are going to be. That's the time you buy, because if you're doing it on a prediction basis, you're never going to get that correct. You're never going to predict the market.
Well, Jim, you and I have been around long enough that we know that trying to time the market is a fool's endeavor.
It is. And I still, though, people still, They're like top 10 list, I guess. They still try to think they're going to time something. I want to time.
I can time interest rates really, really well.
Yeah.
I have no problem timing interest rates. I know with very, very high level of certainty that interest rates right now are about sitting in the low sixes. What are they going to be 6 months from now? I have about a 40% certainty of what they're going to be in 6 months from now. And if you've been listening to Ron Siegel Radio for any length of time, you know Doty's Law. Anytime a forecaster says they've got a 40% certainty, they don't know what the heck they're talking about. That's from Jim Doty. He's been a top economist for decades over at Chapman University. Doty's Law, 40% means that the forecaster has no clue.
Yeah.
Right? If I knew exactly what interest rates are going to be 6 months from now, just like every other person that forecasts, they'd be putting their money into the bond market and making boatloads. They wouldn't be talking on radio. They wouldn't be doing economics. They'd be sitting on a beach somewhere, just rocking in dollars.
Yeah, we'll find out when Tuxapani Phil gets his shadow and at the same time. But yeah, so I mean, six is a good rate.
Well, Jim, you and I know that. I mean, you've been doing this for 100 years. I'm a little less, but I think the last time I looked, the average interest rate over my career has been like 7%, a little over 7%.
Yeah, it's like that'd be. I mean, so let's say 6 to me is a good rate. Sellers have to think about something too. They're sitting there going, how do I time the market? Is this the best time to sell and everything? It's like, you should not be thinking about that, because if you're selling, guess what happens after you close escrow? You become a buyer.
Yeah, most of us have
and
this desire
where are
to
you
live
going to be?
indoors.
Where are you going to be buying? And you're going to be buying at 6. You might have sold your house with a 3% because you scored a couple of years back when we were at 3%. It's been what now, 2-3 years before we were that low. 4 years, I'm pretty sure. And so you're now becoming a 6% buyer. So that's another thing to think about, because if you're a seller, you're going to become a buyer just as quickly as you sell.
But here's the thing, Jim, and I talk about this on the show all the time. You and I enjoy good restaurants.
Absolutely.
Have you ever been able to go to a restaurant? Did they ever ask you what your interest rate is?
Never.
Do they want to know do you have cash or your credit card?
Yeah, exactly.
Either one of those. So it's irrelevant what the interest rate is, because you're saying that the person's at 3%. Well, guess what? If they go and they've got a $2,500 mortgage payment, and now they go and buy a property at 6%, and they put a boatload of money down, they might still have a $2,500 mortgage payment.
Exactly. That's mortgage payment is a big factor that we don't really get into very much. That is, keeping that mortgage payment in line. And this is why I say that with some of the tax cuts coming up, that you probably are going to, you're thinking, okay, well, I can meet that mortgage payment, but that's going to leave me a little thin. But with some of the tax cuts,
don't talk about thin, sir. Some of us are oversized.
Okay. Anyways, but as the tax cuts come in, you might have a little bit more cushion. That gives you a little more, I think you always say it best when you're talking about, you got to keep looking at your overall family rate, what your spending is, your household blended, because
which is part of our calculator suite.
Yep. Thank you. You're another. I'm just giving the plugs today, aren't
Absolutely.
I? I must be.
Might have to
I don't know what I
again.
did. I can't believe I'm agreeing with you, because. But that is just, you've got to look at the picture, and this is what I hate about some of the realtors today. They just want to know is, what do you think you can get for your house, and then you throw out a number, and then they just agree with you, and the next thing you know, you're playing a shuffle, and you're trying to how do you come down without people getting disinterested? Because if it came down a little bit, it's going to mean it's going to come down a lot of bit.
And that's a big issue right there, because you have to really be careful of what that perception is also. Hey, great information as always. If you want to meet Jim Norton, give me a call. Why would you want to meet Jim Norton? If you want to meet Jim Norton, give me a call at 800-306-1990. Be happy to put you in touch with him. Great real estate agent here in North Orange County. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990. 800-306-1990 or ronsiegelradio.com. And remember, make a lot of money. It's going to help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.